Hi folks, this is Big Mike Zlatnik, and today we're going to discuss the advantages of investing into private real estate funds versus publicly traded REITs. So first of all, publicly traded REITs have one simple advantage. We're starting with the other way. We're talking about advantages of the private funds, but we'll cover what is the advantage of a publicly traded REIT. The biggest advantage is liquidity. You can press a button and sell publicly traded security. Liquidity with private funds may exist or not. Closed-ended funds typically don't have liquidity, while open-ended funds may have a liquidity. For example, we'll use one of our funds. The Employee Income Fund has a redemption mechanism that gives folks liquidity through a quarterly redemption and subscription process. Now, is this the same as stock sale? No, but it exists. It's different. So folks investing in private funds, generally speaking, should be used to or prepared for somewhat less liquidity or lack of liquidity if it's a closed-ended fund. So it's a difference. It's an important difference to know. But private real estate funds have 7 other great advantages. We'll cover them. So let us start by talking about better deals and better opportunities. Private markets with great managers, with great access, with great connections, are able to get, or may be able to get, phenomenally better deals with distressed sellers, deals with pocket listings, deals with non-marketed or poorly marketed deals. In addition, they may know information that other folks don't. With publicly traded security, information travels fast. Internet age is such that news flows and the stock moves with news. So it's an efficient market. Publicly traded markets are efficient markets. Private markets are not always efficient. In fact, they're often inefficient, meaning that information is private, not traveling fast, and folks who have that information, who have the connection, can achieve significant advantage over folks who don't have that information. So private funds may be able to, in many circumstances, achieve significantly better outcomes. It depends, of course, on a fund manager, their network, their experience, their team, et cetera, et cetera. So that was number one. Now we're going to go to number two. Number two is private funds have lower volatility than publicly traded funds for obvious reasons. Publicly traded funds respond to the market news up or down, or market sentiment up or down. Fear, greed can move the market fast and furious, while privately traded funds, their performance depends on the execution of the business plan. So private managers have the ability to continue to do what they do without the disruptions of shareholders screaming, sell, sell. So this is a very important element. Yeah, lack of liquidity or worse liquidity with private funds could be a beauty, as the fund is able to execute their business plan. The liquidity is a beauty and a curse in public markets. Next, more options. Private funds, there are more private funds. There are more deals out there. There are more managers. There are more opportunities. Now, there are publicly traded REITs. They're typically bigger. And certainly, for some folks, the liquidity is an important element. But besides liquidity, understanding what they're investing into, doing their due diligence, so we'll get to that in just a second, can make investors more comfortable with private transactions. So again, more options exist for obvious reasons, more operators, more strategies, more locations, etc. Now we're going to move into one of the most important benefits of private real estate funds is ability to build personal relationship and do deeper due diligence by connecting with fund managers, their teams, understanding the strategies, their strengths, their weaknesses, and the opportunities they have in front of them. You can build, know, like, and trust with individual fund managers. It's a lot harder to do with executive teams of publicly traded REITs. You have to be a much bigger investor to get the same attention from a publicly traded REITs versus a private fund. For example, let's say you invest $1 million or $2 million into a fund. That's your target range. At times it could be a lower number. At times it could be even a few $100,000. You can connect with the fund manager, get them on the phone, on a Zoom. You could speak with a team. You can get better understanding who they are, what they do, their values, their strategy, etc. If you try to do it with a publicly traded REIT, a $3 billion REIT, good luck. If you're $1 million investor, well, buy the stock and play along. Now you can read the analysis from the experts and analysts at the same time. To connect to the executive team is very, very difficult. So again, if you are a large investor, $50 million, $100 million, yeah, you will get attention of the CEO of the company, etc. But for most of high net worth investors, it is better to build the relationship with the fund managers. Not only you can build the relationship, you can also get better deals. Opportunities exist with private funds where you could get what is known as a side letter or improved terms. You can get your class of shares upgraded to units because you are a larger investor on a relative basis, and you're a programmatic investor. You will invest into a deal today, you will invest into a deal tomorrow, etc. So these relationships make a gigantic difference. In addition, there may be deals where a fund takes a portion of a deal and you may get an opportunity to co-invest. Again, private relationships can be a lot more lucrative on a long-term basis versus publicly traded REITs. Next, due diligence. You can also do deeper due diligence with private funds versus publicly traded REITs. You could meet with a team. You can even request to do a background on them, understand who these folks are, understand their track record, etc. With the publicly traded REITs, these executives or a firm, yes, you can do the research where they worked in the past, but it's a very, very different experience. Next, white glove service. As a high net worth investor, you deserve white glove service. You're participating in these private funds with private teams. You can get help with subscription. You can get help with your self-directed IRA. You can go on a due diligence trip. You can visit the team. You can look at the assets. You can spend time understanding how they're doing it. You could, and this is part of the relationship building. White glove service and relationship building, they go together. So it's an important benefit you can achieve. Next, there are opportunities that don't exist in public markets. I'll give you an example. There are niche strategies that can make a gigantic difference from a financial perspective. I'll just give you one, so at least you can understand. You can convert traditional IRA to Roth at a steep discount to the invested cash through typically closed-ended funds or syndications, because you can get a discount for the lack of liquidity and lack of control. Now, it's not a trivial exercise. There are strategists who do it. There are certain CPAs who do it. Obviously, consult with your CPA before doing anything like that, but many people have done it, and it works really well. You can invest, let's use an example, $200,000, and valuation ladder could show $100,000. You would pay taxes on a reduced amount. It's a very powerful technique to save on taxes and convert from traditional to Roth. Can you do it with the stock market? Of course you cannot. The price, daily price, is what you're going to convert at. If the price is up, you're going to pay more for conversion. The price is down, you're going to pay less. But it's a function of the current market. With a private, it doesn't work like this because valuations don't happen every day. And the valuation could be at a significant discount. So it's a very powerful way of private funds to enable you to convert traditional to Roth. In any case, there is no right or wrong. There's a place for both. It's a place of abundance and it's a place of portfolio diversification and portfolio management. Individual folks may choose to do both. It might make sense to do both. Some publicly traded REITs to have the liquidity, to have the option to get access to cash. And on the other side, invest capital into private funds and private deals for better returns, for better relationship, for the white glove service, for deeper due diligence, for better opportunities. All those things exist. Quite often, it's an individual portfolio allocation, an individual level of comfort. Plenty of folks who do a lot of things with private funds, a lot more things than with public securities. But there's a place for both. That's the bottom line. So appreciate your time and attention. I hope this was educational, a little entertaining. Thank you so much. Have a nice day.